Welcome, everybody, to another episode of the Ag View Pitch. We're heading into a new marketing week, actually, the middle of December now already, the 16th through the 20th, and hopefully everybody's getting their Christmas shopping done or not like I do and wait till the day before. So, with that said, we have Jim McCormick with us here today with agmarket.net. Jim, how's it going?
I'm doing well, Chris. Thanks for having me on, and Merry Christmas to all your listeners out there.
Yeah, you got your Christmas shopping all done, probably, right?
We are actually done. It was probably the
Oh my
earliest
gosh.
we've been done. My wife and I decided last weekend we're going to go get it done and get it out of the way, and we
Wow.
did. So it's actually kind of a nice feeling.
Yeah, that sounds like it. Oh, holy cow. Yeah, my wife does majority of that, so I can't really complain, but it's you got to reward those who reward the rest of us too. So I think I got some work to do yet. But speaking of work to do, let's get after it here for a minute and talk a little bit about, first of all, last week we had a report on Tuesday, and I think we saw some strength. We saw some light shining on some good things and some other things that maybe not so much. Talk a little bit about how the dust kind of has settled now from that report.
Okay, I mean the big thing in the adjustment was what they did in the corn market. Now, the one thing to kind of take in effect, Chris, is traditionally in the December report, they don't traditionally make a whole lot of adjustments. They never make yield adjustments. They never make acreage adjustments. They do every once in a while tweak the demand. Well, this demand revision that they did in the corn, this 200 million bushel total demand upward revision, I think it was one of the biggest upward revisions to demand we've ever seen in the month of December. And it's one of the bigger revisions we've seen. So it was a little bit of a surprise to the market. And we did get some positive traction to it. And the market did rally briefly. It took March corn right up to essentially the fall highs. It took the DEES 25 corn right up to kind of the technical downtrend line, as well as a 200-day moving average. So we did respond positively to it. But since then, we have backed off toward the latter part of the week. The market kind of drained back down a little bit, because there is, I think, a little bit of question about where this demand, were they a little bit too aggressive to do it? Or more importantly, now that they've made this big demand revision, what's there to feed the bull market? So a little bit of a pullback here, like I said, late in the week, and then we'll see how the last full week of the trading year goes this upcoming week.
Looked to me like there was a ton of farmer selling in that window that really kind of, it seems like every time we might see some strength in that market, it seems like we're just going to continually have that rubber band effect. Any comments on that? I mean, do you really think if we got through some of those technical ranges that we would see a big enough jump, or do you feel like this wet blanket of a lot of inventory still unpriced is really going to hold some of that back? Any thoughts on that?
Well, I think it kind of depends on how quick we kind of move through that technical point. If we saw, like you said, I agree, we saw massive amounts of selling this week when we hit those technical points. A little bit on the new crop, definitely in the old crop. When you talk to producers across the country, a lot of people are waiting in lines as they're delivering grain right now. So there's no doubt about it. We moved a lot of grain. I think and it's a big if, I think if you got a big run up to 450, let's say this upcoming week, you're probably not going to run into as many technical that wet blanket, as you put it, because we hit those open orders at 450. But if we keep the trend going, I've got late in the week where we kind of bleed a little bit lower, and let's say we bleed a little bit lower into the holiday, the next week, 2 weeks, I think that what tends to happen is people who missed the 450 sell last time, certain people sold 450, certain people reached for a little bit more, they'll tend to put that order back in at 450, what stopped at the last time. And the reality is, I think that you'll see that simply because, the farmer, unfortunately, Chris, I think in general is in a very weak fiscal position going into 2025. The balance sheet for 2025 doesn't look that good. I'm sure you've run that with all your people you work with, and they all know there's not really anything really great going on right now. So I think that's going to put a lot of pressure on producers to move grain relatively aggressively in 25 in the early part of Jan, Feb, March. Unlike a year ago when we thought we'd see a lot of grain move early in the year and it didn't happen, the producers kind of held tight, but a lot of them ended up selling corn a lot weaker price down the line. So I think that also is going to encourage a little bit more aggressive selling as we flip into 2025.
So if the growers had some of these targets hit, and let's assume that they were content with what got sold, they put some more back in. as you said, maybe sub a little at 450, and we can talk about beans here in a minute because that's kind of a gross topic. But on the corn side of it, stay there for a second. If we, throw some more targets in sub that 450, what's the high end of where operations? What's the target, or what's some of the ranges you think guys maybe should have some orders in for pricing above that range that maybe we could get to that's worthwhile having those targets in?
I mean, personally, Chris, I think 450 is going to be pretty tough to break near term. I really do. But, if you look at the chart, roughly every dime higher, you're kind of looking at some chart resistance. So maybe 460, 470. But I would argue, I think those are going to be a little bit of a reach at this point in time. And the reason why I say that is, there's two things that we need to keep an eye on. The government was definitely aggressive. Let's talk ethanol. The ethanol grind has been great. It's running about 4% ahead of last year's pace. So that's why the government raised the ethanol demand by 50 million. But what's interesting, right as they raise the ethanol demand 50 million, if you look what's going on in the ethanol industry, you're seeing quite a few plants. I got 8 to 10 plants that I've heard of this week alone are slowing down their crush rate. They are backing off dramatically. And the reason being is they're not making money, and the margins have bled into the red pretty aggressively for the next quarter potentially. So if that continues, and it's a big if that continues, you could see a situation where the government might have been a little bit too aggressive on the demand revision up. So we kind of pause it. So as we get into next year, I'm not sure what's going to carry that market to get you excited over 450 without maybe a supply revision on the January report. Mm-hmm. On the export side of the equation, we've been running great. We're about 30% ahead of last year's pace. And that has the demand bulls very excited. And that's hence, Chris, why the government raised the demand, I believe, 150 million. Because you look at it right now, snapshot to a year ago, there's all sorts of justifications to raise that demand 150 million. The $1 million question, though, within the industry is this being front loaded due to the election or the fear of the election of President Trump, as well as the election of President Trump, because he has threatened a lot of our exporters with tariffs. He's threatened Mexico with 25% tariffs. He's threatened Canada with 25% tariffs. He's threatened to add an additional 10% tariffs onto China, which would push their tariffs up to roughly 29% if he does that. So there was an impetus for the end users, the buyers who don't want to get caught up in this political, battle between the president and their, the Mexican leaders of their country and the Canadians to just get their grain in. And then maybe they're just front running it, plain and simple. So we won't know that really, Chris, until we get a little bit deeper into 2025. But a little bit of a red flag happened this week on the weekly export sales, and the fact that corn sales, I believe, were at 11-week lows. Bean sales we're pretty much marketing year lows, and the wheat sales are at 11-year lows. So this week's, it's 1 week doesn't make a trend, but I do think that may be a little bit of red flag that maybe, the exporters or the buyers of the U.S. grains were front loading it. Like I said, the only way we're really going to know is time will tell. We get into January, early February, and the demand stays strong. That's a very good sign. But, if they're front loading it, we could see the sales fall off quick. And then you got the risk that the government eventually has to cut back these revised exports they gave us early now, later on down the line.
Mm-hmm. I don't want to stay on negative stuff on corn, but I do need to bring up one other thing too that I kind of want to get your 2 cents on. So last week, Dwayne Lowry and I were talking, and one of the things that he's fearful of, and I want to get your take on this, is when the Trump administration comes in, watching crude oil prices and the pressure that might come, all of a sudden crude oil prices dip down quite a bit. His thought was, just the whole commodity index is going to be under pressure potentially with the administration as well, just with cheap crude. Do you think that's something to watch too, or what's your thought on the energy side?
Well, I mean, I think you got to watch the crude oil. Crude oil tends to be the canary in the coal mine in general for the economy. Right. So goes, the crude oil is weak. It hurts the demand for biodiesel, hurts the demand for, gas and everything. So overall, it's going to be now, I think the near term situation with the Trump administration, the crude oil market, it's going to be, how does they affect China? China's talking about this past week, throwing even more stimulus. They're talking like stimulus we haven't seen since the 2008 financial crisis to get their economy up and running. Mm-hmm. If you would put a trade war into China, roughly we are one of the biggest exporters to China. So, we start tariffing in a tariff battle with China, China's economy is going to struggle. If their economy struggles, it's going to drive down the price of crude oil. If you look at OPEC, Chris, about 4 or 5 months ago, there was talk that OPEC, I call it was about ready to throw in the towel. They've been cutting production and trying to hold production off the market for the last couple of years. But what they're doing is kind of what's going with us in Brazil. As they're holding production off the market, U.S. production has actually been expanding. We're actually exporting about 3 million barrels a day. So you're looking at a situation that, if China's economy does start to increase, does OPEC finally say, you know what, we can't beat them, join them, we're going to start raising our production as well, because they're essentially struggling with these low prices. They've been trying to hold off the market. It hasn't worked, so they're going to go with volume. So we'll see. But yes, I think the crude oil is going to tell the tale, because if it's weak, it usually shows signs of economic weakness around the world, and that just bleeds into demand for all commodities.
Mm-hmm. Yeah, everything we've been talking about on corn just continues to echo in my mind the importance of us as producers to make sure we're dialing every penny on the cost of production side, because we're going to have to navigate this, 450 something in corn ish probably, and nobody knows for sure, but we need to try to figure that out. I want to transition though that thought over to soybeans, which is even more of a challenge, I think, and have you talk a little bit about South American weather. I mean, you hope in a weather market there's an opportunity at some point, and it just seems like, this, wheat as well. I mean, wheat and soybeans. I mean, talk a little bit about, what producers should be thinking about when it comes to the pressure we're seeing on soybeans, I guess, specifically.
Right now, let's talk beans first. I mean, the weather in South America in general has been very, very good, especially for Brazil. We are getting to the point where I think you're almost running out of time to actually have a production problem with Brazil. Now, Argentina, they still have some potential window where they could have problems, but Brazil looks like it's there. It's interesting, Chris. I think in a way, I was looking at the way the government report came out. I think they gave the farmer a little bit of a gift, because they did raise that demand. Like I said, you could argue they could have held off on the corn demand revisions, because it's all, wait and see if it's front loaded. But they also gave us a little bit of help, because they did not raise that Brazilian bean crop. Right now, there's a lot of private estimates think that Brazilian bean crop is going to top out closer to 175 plus. And the current estimate at 169 is about 10 million metric tons bigger than the previous record crop. So this crop is getting bigger by the day. And I think eventually the bean market, unfortunately, is going to break. Now, if you look at the charts, they've been consolidating at this $10 zone roughly for a couple months now. And I think there's hope that that's a sign that the fall lows in. And I know there's some advisors out there that are arguing the fall lows in. I'm very leery about that right now. I think it's a situation, when you look at consolidation, traditionally what happens, Chris, is you go down, you break, you consolidate. Usually you don't reverse after a long term of consolidation and go back up. What tends to happen is you consolidate, then you make the next leg down, or vice versa on the way up. I fear that we're consolidating here. And then as we get confidence, the trade gets confidence that the Brazilian crop is there, I think you're going to unfortunately get that next leg down. When you look at the currency valuations, what the Brazilian real is doing and what the US dollar is doing, it gives them all sorts of economic advantages on top of it. So if if I've got clients out there that have got beans, I'm going to tell you, I think you've got to get rid of them very, very quick. I think the window is shutting very, very fast. If you want to play what if Argentina could have problems, I would, use options. New crop beans, it's a little bit more tough situation. I mean, you're looking at $10 beans. Let's face it, Chris, they're not exactly, they're not pricing in profitability unless you just grow fabulous, yields, 80, 90 bushel bean yields, which most people don't. But I do think, unfortunately, there is a risk in the beans. Now, we do here at Ag Market believe that we're going to lose bean acres to corn this upcoming year. We're thinking closer to 95 million acres of corn, maybe a little bit more. What could cap the corn acres increase is just the fiscal viability of the farmer to be able to afford to plant corn. Mm-hmm. But the 95 million acres, Chris, that pretty much is, when you think about it, just 2 years ago, we planted 94.7. So what we're doing is just kind of swinging back to what we were just 2 years ago. So you get 95 million acres of corn. We have trend line yields. You're going to overwhelm the U.S. corn market with a supply. we're going to lose some bean acres. But if Brazil manages a 175 crop, it isn't going to matter, unfortunately, because your world supply, due to that monster crop in South America, will be at all-time records. So unfortunately, we are staring a very ugly balance sheet in the face without a weather problem.
So, I mean, and I think, and I've heard this hope from some of those, when you look at what's the crop acre mix going to be at the micro level, not the macro level, but when you talk to these individual farmers and we're doing budgets and stuff, there's a segment out there, which is probably the larger of all the segments, that pretty much is going to stay the same. And then you got the segment that is willing to shift one way or the other, and then the segment that has multiple cropping opportunities. They can grow more than just corn and soybeans and have some other flexibilities. But what it looks like to me is, I think that the hope out there for those that are staying with the same rotation is there'll be enough shift over the corn acres that there'll be a benefit on the soybean side. But what you're saying is good luck, because there's probably not enough to offset. Am I hearing you right? And is that the message?
That's the message right now.
Reality.
I mean, if it was just the U.S. alone in our own vacuum, that's fine.
Right.
The problem is we're doing a world market right now, and the world's going to be oversupplied. Now, we got to talk to 10,000 pound gorilla in the room as well. This balance sheet, Chris, we both agree, is ugly. Mm-hmm. That doesn't even include a potential trade war with China, which we don't sell a lot of beans to China compared to where just even 5 years ago, but we do sell some beans to China. Mm-hmm. Situation. Is that going to exacerbate the problem potentially? Yes, I think there is some real risk. And, what I would look at doing is maybe in more of an option play with beans. No one wants to sell $10 beans. You might consider like a three-way option. Go out and buy like a put, sell a put, maybe sell a call, where you bracket it, your floor, and say, look, at least I'm not going to get worse than $10 beans, but, maybe sell $11 call and say, I'm bracketed in there till I know where I'm at. I've done that with some new crop corn. I've recommended guys consider buying like the March short dated new crop corn puts. That'll get you protection through essentially most of the insurance time period. It goes off in the third week of February. It'll also give you that first month of the Trump presidency till we get a better handle of maybe how these tariffs are going to outlay. If you're willing to spend a little bit more, go out and maybe buy a May short dated corn put. It's the same thing. You're getting the right, but not the obligation to sell new crop corn at, say, a 430 or 440 strike. That'll get you through the end of April. That'll get you through that all critical March acreage number, which, like I said, right now, I would argue is going to be pretty ugly. Now, could that change? Yes. I mean, we're all talking theoretics here before Christmas, but like I said, what we're hearing is the lean is more corn, less beans, not enough less beans to offset the crop in Brazil, unfortunately.
Yeah. The beans are bad enough that we have people who grow corn, soybeans, and wheat, and the wheat's actually beating the beans in a couple of cases that we've seen. So that's what's really scary. Usually that never happens, but it's just one of those things. So, any good news? We've been talking about, is there any any light at the end of the tunnel that you can see that producers could be thinking about, or any strategy? I mean, you just talked about a couple of strategies. Any other things that, giving you the last word here that producers need to be paying attention to as we kind of think about wrapping this year up and looking into 25?
Well, I mean, Chris, I know your group does a very good job looking at working balance sheets and knowing your break evens. I mean, I think right now that's the most critical thing I can encourage people to do is know where they stand. Yeah. Run the numbers. Be honest with what yield you think you're going to get. I think you got to be honest where you're at. So you're honest with your spouse and you're honest with your banker where we're sitting at. Everyone knows we're in a very tough situation in agriculture, but it can change on a dime. I mean, weather is going to be the thing that could change dramatically. Like I said, it looks like this Brazil crop's going to make it through without a problem. But the Argentina crop's still being planted. That could derail dramatically. The corn market, when you look at the world, there's something, you want something friendly, Chris, right at the moment, you look at the world supply of exportable supplies of the world, the people who actually sell corn in the world, us, like the Ukrainians, people like that, that supply is actually one of the tightest we've ever seen for corn right now. So if we have a problem, the Ukrainians have a problem next summer, or more importantly, potentially the safrinha crop, because the safrinha crop's always the $1 million question. They get it in on time, that's fine. But if the rainy season ends early, Chris, all of a sudden that safrinha crop's 30% less than we think, it will change the ball game dramatically. So there are some reasons for this market to rally. But the hard part about it is you hate, as a producer, it is, you hate to count on weather to give you that marketing push, because let's face it, we just don't know what the weather's going to be. But it's not a guaranteed bear market for what it is. So our argument is try to defend the downside. It could, unfortunately, the numbers are looking ugly. But, if I sold a lot of old crop corn, I would encourage people to consider maybe buying some re-ownership calls, maybe a vertical call spread. Because like I said, if the weather does change in South America, it'll go. The other thing is we really don't know what's going to happen with this Trump presidency. There's a lot of talk of tariffs, but there's a lot of talk that maybe it's just a negotiation tactic. We will see. The best advice I can give you, Chris, and your clients is if you have a marketing number that you want to sell grain into, get the order working.
Yeah.
A real quick example here. One of our clients had orders in to sell beans about 50, 60 cents higher than the current price. He put that order in the summertime. He forgot he put the order in. He got filled. The elevator sent him an email saying he was filled, and the client never saw the email. Then he got a pleasant surprise today when the guy said, "Hey, you got all this beans sold. What are you going to, when are you going to bring them?" Get those orders working. It's one of those pleasant surprises, but you never know because it is very thin this time of year. We've got a lot of news that's going to come out between now and January 20th. The market could react violently. And if you get that upshot, don't be afraid to lock in the profits if you get the opportunity.
Yeah. Yeah. That's excellent comments to wrap up with, because kind of like we talked a little bit earlier in the conversation is, where should we be putting those targets? But I think we need to blend them, right? We need to have them first of all and have them working, because that's where the opportunity is at. And a lot of times you get 5 minutes in the middle of the night, and most of us are sleeping in the middle of the night, and 5 minutes is a pretty short time to make a decision. So having a plan's huge. But hey, Jim, this has been a great conversation. You bring up a lot of really good points, a lot of really good perspective that I think people need to think about. And this is probably one you almost go back and listen to again to kind of take it all in, because you pointed out a ton of things that I think are just things that we all need to have in our mind while we're doing our budgets and while we're thinking. And with that said, if people want to reach out and just have a conversation with you and, kind of bounce some ideas back and forth, what's the best way to reach you?
I think the best way to reach me is to go to agmarket.net, Chris. You can sign up for our conference coming up in February, or you can email me at jmccormick@agmarket.net as well, and I'll be happy to answer your questions.
Yeah, talk about your conference real quick. What's
our conference?
A little background on that.
Yeah, it's going to be in Nashville on February 2nd and 3rd. That is the weekend before Super Bowl Sunday. So for all the people out there, football people, it's there. It is in the afternoon of Sunday, and then it's all day Monday. We've got a couple. We got Eric Norland coming in for the CME group. We've got Eric Snodgrass talking about weather. We're going to take a deep dive in the economics. This is going to be a very tough year. I know you guys got a great conference as well, Chris. And, I think knowledge is power. I mean, the reality is, these balance sheets are negative. There's no doubt about it. But there is always opportunity if you're prepared to take advantage of it. And that is the goal of our conference, is get you prepared to take advantage of anything that may come about in 2025.
Yeah, I heard a lot of great things last year, and I'm sure it'll be another hit again this year. So make sure you guys check that out. And with that said, again, Jim, thank you very much. And thanks to everybody for listening. And we will catch you again next time on the AgView Pitch.